Hello everyone, and welcome to today's webinar on obtaining an excellent bank rating. I'm glad everybody is able to attend the webinar today. I could pretty much assure everybody that it's going to be a very enlightening day, because today at the end of the webinar what you're going to know is what a bank rating is. Until I got into business credit, I never knew that a business had kind of its own business credit score that only banks saw. I didn't know that. I didn't know that banks had their internal rating system, and that internal rating system ultimately determined whether a business would be approved or denied financing. And that's what bank ratings are. And today, that's what we're going to jump into. We're going to talk about what bank ratings are, how banks rate a business, the scale that they rate them on, what you need to do to get an exceptional business bank rating. And in doing so, what you'll find and what you're about to uncover is that bank ratings are the secret behind getting approved for banking. If you have a good high bank rating, you're probably going to get a loan. And if you don't, you probably won't. So a lot of your approval or denial determination from a lender comes down to what your bank rating is. Let's jump into the topic at hand. What we're going to do here is we're going to spend about half of this webinar today actually going through bank ratings. Then we're going to spend some time at the end going through the actual funding suite, and I want to show you something in our credit suite that I've never shown before ever to anyone, never shown on a webinar, never shown on presentations, which is how you could actually build a bank rating right through our system. So we'll dive into that after, but first let's get into some details. Let's talk about what these bank ratings are, how they work, get you a little bit more exposure to them. So a business bank account, obviously you're familiar with. It's an essential part. It's essential that any business owner separates their personal and business banking. If you own a business, you really shouldn't be using your personal bank account. It's really essential that you open a business bank account. Okay, it's really critical in having any kind of successful business, because what you'll realize is a lot of people only need to deposit into a business account, and a lot of people only lend you money or even begin the business credit building process only if you have a business bank account. As a matter of fact, a lot of in lending, they look at the date of your business bank account being opened as the date of your corporation being opened. So that means if you open your business bank account today, even if your corporation's been open for 10 years, a lot of lenders look at your business just opened today. So you really want to have a business bank account. It's really crucial in helping you run a successful business. And one of the major financial tools to do that, of course, the business bank account. A business bank account helps maintain accurate records for the business, prepares reports, deposits, withdrawals, wire transfers, issues checks. All those things can be done through an actual business bank account. Okay, now whether a business owner decides to open an account at a national, regional, local bank, you really want to focus on a bank that best caters to your individual needs. This is becoming more and more easy nowadays. There's so many different kinds of banks popping up, and they all specialize in different things, that you really want to try to stick with a bank that is close and offers services that you're going to need. And you're going to see why here in a minute, why that's so important. Now, while every bank offers various types of financial products, each serving a specific need, one thing remains the same: bank credit. Meaning that a lot of these different bank institutions now, they have different niches, different strengths. Some are good with business, some are better good with personal. But the one thing that they all consistently have, but you may never know about it, they'll never tell you about it, is bank credit. It's the one thing that's completely consistent in the banking industry. Now, bank credit is the total amount of borrowing capacity that a business can obtain from the actual banking system. It's not the same as business credit, okay, because business credit's a much broader scope. It looks at suppliers, credit card issuers, leasing companies. With bank credit, you're only dealing with bank financing. It's one of the biggest differences between bank credit and actual business credit. Now, a business can secure more business credit quickly as long as it has a minimum of one bank reference and an average daily account of at least $10,000 for the past 3 months. Okay, when you're building business credit, this is what a lot of them love to see. They want to see that you've had a bank open, or that you have a reference from a bank indicating that you have a bank account open, and they really want to see you have a high of balance as possible in your accounts as high as $10,000 or higher, okay, in the last 3 months. And you're going to get a little bit more detail here in just a few minutes. But this yields a bank rating of a low 5, okay, meaning an ADB, which is average daily balance of $5,000 to $30,000. Okay, that's what a low 5 means. We're going to get into some more specifics in this in just a minute. Okay, so the goal is to get a bank rating of 5, at least the lowest of which is a low 5. We'll talk about the ratings in just a minute. Now, a lower rating, such as a high 4 or balance of 7 to 9,900, won't stop a business application. It means it won't mean that you're denied, but it's going to slow down the approval process. So if you have a high 4 rating with a bank instead of a low 5, it could literally mean the difference between being approved or denied. Even if you are approved, it will definitely delay your application from being approved. Now, again, just hold on. We're going to jump in and look at exactly a breakdown of these bank ratings here in just a few minutes. Okay, the rating is the average minimum balance maintained in the business bank account over a 3-month period. This isn't the only factor that ties into a bank rating, but it's the main factor. The main factor that affects your bank rating is right here. The rating is the average minimum balance maintained in your bank account over a last 3-month time period. Okay, a $10,000 balance will rate a low 5, $5,000 rates as a mid 4, $999 balance rates as a high 3, and so on. Okay, now the main goal should be to maintain a minimum of a low 5 bank rating, about $10,000 for at least 3 months in your bank account. Unfortunately, without at least a low 5, most banks will assume that the business has little ability to repay a loan or a line of credit. Look, the reality with bank credit is this. You get out of 5 and you get down into a 4 level, you're going to have problems. Now, maybe you're a high 4, and maybe your application will get approved but just take a little bit longer. But the bottom line is, if your business has a bank rating of lower than 5, it's going to be very tough to get approved for any kind of bank loans, any kind of actual bank financing. So I made a scale here. Actually, I don't think you'll ever see this, okay, because it's very difficult. If you go to Google right now and type in bank ratings, you'll see there's not a lot of information out there about it at all, let alone the actual scale that they're based on. And I didn't go all the way down, but I went through 5 and 4 because this, if you're lower than this, you're pretty much not going to get bank financing. So this is what the bank ratings actually mean. You're actually looking at the actual breakdown. A high 5 account typically has a balance of $70,000 to almost $100,000. Remember, this is an average daily balance over the course of about a 3-month period. A mid 5 account has a balance of about $40,000 to $69,900. Okay, so about $40,000 to $70,000 is kept in an account on average balance for somebody that has a mid 4. Somebody that has a low or mid 5, somebody that has a low 5 carries a balance of $10,000 to $39,000 in their account. That's why so far, and you will continue to hear me reference, that you really should have an average daily balance of about $10,000 in the account, because that will give you a 5. That keeps you in the 5 bank rating. If you have less than $10,000 average balance over 3 months, you drop to a high 4. That's a $7,000 to $9,999 average balance. A mid 4 is $4,000 to $69.99, and a low 4 is about $1,000 to $3,999 a month on the actual bank account. So this is what you're looking for. You want to be a 5. You really want to be a 5. If you're a 5, you're going to have a pretty good chance of getting approved. You drop down to a high 4, meaning that you carry a $7,000 to about $10,000 balance. Maybe you'll get approved depending on what it is you're looking to apply for. And if you're down in the mid 4s, meaning you're carrying a balance less than $4,000, look, here's the reality. It's really, really tough to get approved for bank financing at that point. So that means to get bank loans, to get bank financing, you really want to have a high bank rating of 5 or higher. And to do so, you really need to focus on maintaining as high a balance as possible, preferably over $10,000. Now, business owners need to do whatever they can do to put $10,000 in the account over 90 days. Okay, and the money should be kept there just to ensure the bank rating is high enough to increase future financing approvals. Now, each cycle is based on the balance rating during the previous 3 months. Okay, so January, February, March. Boom, here's your rating. Now all of a sudden you have a $10,000 deposit and that money's in there April, May, June. Well, your bank rating for those 3 months is going to be 5. So if your bank rating right now is low, don't worry about it. It's not like a credit score that takes years to get up. You just do the right things, and all of a sudden in the next 3-month cycle, that bank rating could be high 5 for that matter. Okay, so each cycle is based on the balance rating during that previous 3-month time period. So before you decide to apply for credit, it should keep a balance rating of a low 5 for the past 3 months. You know, my wife and I are going to go get a car this year, a new car. And one of my buddies owns a consumer finance company. And every time we go to get a new car, I go get money from him and have him report it on the bureaus because he reports it as an auto trade line, okay? And I understand credit scoring. I understand auto credit scoring. And I know about another year of an additional auto loan paid as agreed radically increases our auto credit scores. So we always do this. The year before we go to get an auto loan, we'll always make sure we go to him, we get an extra auto loan put on our credit just to go ahead and raise our auto credit scores. That's exactly what you should do for your business. If you're thinking about going out and applying for a bank loan or getting money from the bank, then 3 months ahead of time, you need to start focusing on this bank rating. You need to know it, you need to understand it, and you need to plan accordingly. So go in and put the money in your bank, borrow it. I don't care what you do. Just get as much money in there as possible and leave it in there a few months before you actually go to get a loan. That way your bank rating is as high as possible before you actually go in to apply. Okay, now it's also essential that the business owner ensures that their business bank accounts are reported exactly the way all their business records are, with the exact same physical address. It's very important. Okay, bank ratings do take this into account. So you've got to make sure that your address with everything to do with your bank account is the same as your corporation papers, the same as your licensing, the same as all the pertinent licensing and those type of requirements for your business. Now, it's vitally important that every credit agency and trade account vendor, every record keeper, okay, also lists the business name and address the same way. We talk about this pretty heavily when we talk about building business credit. Okay, and I talk about it in bank ratings because honestly, it's just as important. And people don't realize it. You just don't think about it. You change your address, you don't think about it being changed on everything. But they look for this a lot in lending. It's a big factor they look at is consistency, meaning does your business name and address, is it the same on your bank statements, on your licensing, on your corporation papers? Is it the same on your electric bill, your phone bill? They really want all that to be uniform. It really has a lot to do with business credit, bank ratings, so make sure that you do that. No lender is going to stop to consider all the ways a business might be listed. Okay, and this is another factor. So when they look into your business's creditworthiness, and you put your business as ABC Company, but your real name is ABC123 Corporation Company, well, they're not going to know that. They're not going to go digging for your information. So you need to make sure it's all uniform so when they go to look up your actual business, they can find your business. They won't keep looking for it. Okay, if they try to look up your business and can't find it, they'll just deny you. They'll just turn you down. You don't want that to happen. So you need to make sure your name, your address is consistent on all those different things. Okay, it's also essential that a business manages its bank account responsibly. Okay, that means the business should avoid writing NSF's checks at all costs. I mean, it absolutely destroys bank ratings. This is a major factor in bank ratings. Given the biggest factor is your average balance over 3 months. Now what we're diving into is other factors that affect your bank rating, and one of those other factors is the amount of NSFs you have on your bank account. So you really want to reduce or eliminate any kind of NSFs that you have on the account. Okay, even if you have an overdraft protection, a savings account, something like that. Now, in business credit and in business funding, I'll tell you there's a popular funding product, one of our most popular, called revenue lending, where we can get people money just because they have cash flow through their business, just because they have revenue. Okay, and that one type of financing, even merchant advance financing, merchant card credit, those type of funding look at your bank statements for NSFs too. So not only will NSFs destroy your bank ratings, okay, but NSFs will also completely eliminate you for certain funding programs that you might qualify for, so you've really got to make sure you eliminate the NSFs. It's also very important that a business show positive cash flow. One of the other I'd say probably the second biggest factor that affects bank ratings. The cash coming in and going out of a company bank account should reflect a positive free cash flow. So positive free cash flow is the amount of revenue left over after the company's paid all of its expenses. So when the account shows positive cash flow, it indicates that the business is generating more revenue than is used to run the company. Okay, let me give you an example. So what I'm talking about here is pretty simple. You need to have more deposits than withdrawals. You need to be putting in more than you're taking out. And that means they need to see that bank balance growing every month. Okay, if this month you did $10,000 in business, in money through your business, through your bank account, that's great. And hopefully you left $2,000 in there, left over. They want to see that with every month as you're paying bills and bringing in revenue and paying bills, that you have money left over. Okay, that you're generating enough revenue to become profitable and to put, create positive cash flow into your account. It's a very big factor. So remember, as you're taking money out each month, make sure that you're always having more in deposited and keep letting the surplus of money in your account grow, because all of that ties in heavily to your actual bank rating. Now, it's important also to recognize that banks are motivated to lend to a business that has consistent deposits. So a business owner must also make regular deposits to maintain a positive bank rating. And it's vital that a business owner make a lot of consistent deposits, more than withdrawals that they're making, to have a good bank rating. Okay, so on top of cash flow, it's deposits. You can't just have $3,000 in the bank. Okay, man, I got to tell you, I'm guilty of that. Actually, I have an account right now for the company I sold last year. I've got two accounts, bank accounts, open right now with money in them for accounts that I've closed. I just never, or companies that I don't even own anymore. I have the accounts open because I want to be able to do business with that bank. I don't have personal accounts with Bank of America. So I like being able to, if I see a Bank of America need to do banking, be able to do so. So I leave my accounts open and I've got money in them. I just don't make any deposits because the businesses really aren't, they're not my businesses. I'm not doing anything with them. So it's the same thing. With this, you've got to make consistent deposits, because there are people like me that have these bank accounts that have high balances in them, but then again, there's no deposits. There's no cash flow going through the business. So cash flow, consistent deposits, these are other reasons that they look at for your bank rating, because they would want to make sure somebody just doesn't drop a bunch of money in the account and leave it and then just inevitably all the time have a high 5 rating because they have money in the bank. So that's why all these other factors come into it. It's not enough that you just have money in the bank account. You have to be having positive cash flow, putting in more money each month than you're taking out. You need to have consistent deposits, no NSFs. All these factors tie into that actual bank rating. Okay, so bank credit is not only based on monthly deposits, balance rating, and check history, but it also includes the actual age of your bank account. Okay, the bank products that the business actually uses, and any savings accounts or investments the business has. So this means if you have CDs, if you have any of these type of things with your bank, guess what? It helps your bank rating. So the longer you open your bank account, the better you are. That's why the minute you even think about starting a new business, you should open the bank account first. Okay, not first, but right after you open the corporation. See, in Florida, it's easy and cheap to set up corporations. It's $60 to set up a corporation. And I could go there right now to our website, sunbiz.org, and in about 3 to 5 minutes, I could have a new corporation set up. It's that fast. It's that easy. So because it's so cheap, it's so fast, it's so easy in states like Florida, I've got, I don't know, 20 corporations that I probably own right now, because I think of an idea and I go get a corporation and start it. A lot of people do that, but then I may never do anything with the corporation. I've had a real estate corporation for like 9 years I've never done anything with. Okay, but the bottom line is if you look at my corporation, you see it's open 9 years. That's great. Okay, but a lot of lenders will then look at the bank account to see when it's open, because guess what? I've never opened a bank account for that business. So even though you see a 9-year-old corporation, you'd see a brand new bank account. That's why when you first open a corporation, you want to turn around and open a bank account with it, because a lot of lending and even bank credit and bank ratings, all of this stuff looks at the age of that account. It's very important. the bank products the business uses. Remember in the very beginning where I told you it was really important that you worked with a bank that had services that you would probably use and would cater to you and was kind of more of a niche along the type of business you have? This is why. Because those kind of banks can offer you additional products, they can offer you additional services, they can offer you savings accounts, they can offer you CDs, they can offer you other different products with them that will also help your business but will also improve your bank credit and your bank rating. So age of bank account. A seasoned bank account shows stability and longevity in the eyes of the lender. Okay, keeping a healthy and long-standing relationship with a bank is also crucial for all companies. Okay, it's why you don't want to just shut your bank account down and go, get a bank account with somebody else because you don't like them. They're going to look at this, the seasoning of the bank account. Okay, so you want to keep a long-standing, healthy bank account. It's only going to help your business. A good, stable relationship with a bank that reflects longevity will be highly appreciated by lenders considering lending that business money. Bank products being used. Your bank rating will be higher the more bank programs you use, maintain, and pay as agreed. So having investment and savings accounts really help your bank rating. Having open loans, even open CDs, help your bank rating. So most banks offer these kind of programs. Look into them because they're only going to escalate and increase and help your actual bank rating. Savings and investment accounts. Bank ratings are higher the more banking, investment, and savings accounts you have. Interesting. A lot of people don't even have savings account for their business. They only have checking, right? Well, that's a problem for a couple different things. First, it doesn't help your bank rating if all you have is a checking. And second, if you have any overdrafts, if you overdraw the account, you don't have a savings account to prevent an NSF. So if you only have one account now, a checking account, I'm guilty. Okay, most of my businesses I never opened savings account until I understood what bank ratings were. Then I started putting money into CDs and savings accounts. Hopefully you'll do the same thing. So now you really shouldn't have just a checking account open. You really want to have at least a savings account, at least a CD, things like that. It helps your bank rating because you have it, and it helps cover you if you link in overdraft protection to that extra account. Having high balances in those accounts further helps the bank rating, and making regular deposits into these accounts also helps your bank rating. Remember, same thing applies, right? Cash flow, deposits. So if you're cash flowing, you're putting deposits in these accounts, it's also only going to help improve your bank rating. Okay, so beyond just the bank rating, a business bank should also act as a trusted advisor that can assist in the growth. It helps a business to consider working with a financial institution that specializes in providing banking services tailored to their specific industry. The more services the bank offers that the business can take advantage of, the higher the bank rating is going to be, right? I mean, that's what we just talked about. We just talked about all these things that can raise your bank rating, and all of them have one thing in common. A bank that offers services, accounts that you're going to benefit from probably has all those. Okay, so if you go to a bank and find the right bank that fits your needs, that fits your niche, that works with your industry, okay, then it's going to be easier for you because you're going to be able to get more accounts open, more different kinds of accounts open, raise your bank rating, and have an even greater chance of securing money. Let me give you an example. When I owned the credit repair business, I had an account with Wachovia. I started putting some money in there. They shut my account down. I asked them why. They said because I was in credit repair. Okay, they saw my name that had credit in it. They assumed I was in credit repair, which I was. Never denied that. I think I told them I was. And they said, we don't deal with credit repair. We don't deal with your whole industry, so we're terminating your account. It blew my mind, okay, and Wachovia's not around anymore. Wells Fargo bought them out. But the bottom line is that's why you want to, work with a bank that fits your needs. Think about this. What if I put all my eggs in that basket? Now, the ironic thing is in this story is that was my backup bank account. I was afraid that my primary bank, Bank of America, would do the same thing, and I needed a backup. So I opened this account as my backup bank account just in case I ever had problems because of my industry with my primary bank. And then ironically, it's my secondary bank account that gets shut down because of my industry. But let's take a year step back. Let's take a 4-year step back. What if I would have been using that account for 2, 3, 4 years and they wouldn't have known I was in the credit industry, right? Then I go to apply for a loan or whatever, and they say, oh, sorry, we don't even lend to your industry. As a matter of fact, we're going to shut down your accounts because we don't deal with your industry at all. I would have built all this time, energy, and money building this relationship for years with Wachovia, only to find out they don't even service my industry. Okay, it would have been a disaster. I would have lost all the clout that I built for those years. That's exactly why you want to work with a bank that focuses on your niche or industry, because in doing so, then you're into a position where you can grow with the bank. The bank can grow with you. As your business gets better, you can put more money in it. You can get CDs. You can get other investments. When you go to get money, you have a better chance of getting approved because you have so much clout and such a high bank rating with that institution. Okay, so working with a lender that already understands the business is much easier to get a loan approved compared with other lenders, and that's because the majority of lenders have difficulty assessing the credit risk of most small businesses or small industries they don't know about. You know, a good thing to say with this, and many banks have niches or industries they just work better with, is we're doing that with a merchant account. You know, merchant accounts have always looked at credit repair as high risk. So we took one and we sent them a bunch of business and we said, look, we're sick of this. We're sick of you saying that all of our credit repair clients are high risk. It's going to stop. It needs to stop now. So what do you need? What do you need from us to prove to you that credit repair is not a high risk? And we began the process of educating them on what the credit repair industry is, how it works, showing our clients actual merchant statements and the lack of chargebacks. We began the process of educating that lender on the credit repair industry because they were never educated. They were just always taught to say no. And that's why it's important, because a lot of lenders don't work with certain types of industries. Okay, and I used that example before with the credit repair, but the bottom line is they have a difficulty assessing the risk of these types of businesses. Let me give you another example. I opened a merchant account, okay, with my credit repair business. It was a secondary merchant account. And the owner of the company said, you're approved. Yeah, they looked at my merchant statement and said, you're done. You do thousands of transactions with no chargebacks. You're approved. Then I got to their risk guy. Oh my gosh. 70 hours of time putting together documents for this risk guy. They held $20,000 of our money for 2 months while they went through a review of our company, of everything to do with our business, just to approve us. Why? They weren't familiar with our industry. Come to find out, we were the first and only credit repair company they had ever approved. Now, given our merchant statements were ridiculously good, but we were the first they ever approved. And because we were the first, we had to go through this elongated, very frustrating process of getting approved because they had difficulty assessing the risk of our business because they weren't familiar with our industry. Look, it could be killer to your business if your bank isn't familiar with your industry. It really could be. So you really should try to target banks that focus and deal with your industry, because it's going to be much easier for you to get money with them just judging you based on how you do business instead of trying to learn your industry and judging you based on how you do your business. So, while profit and loss statements, tax returns, business credit, personal credit checks are common requirements in the lending process, it's much easier for a lender to underwrite the business financial risk when it truly understands and specializes in making loans to a company and industry they're familiar with. And that's just more of an elaborate explanation from what I just talked about. So let's take a look. And let's summarize, and then let me show you another little inside way to get a good bank rating. Okay, have a good bank rating is essential with securing financing. So to ensure you have a good bank rating, you got to keep your bank account average over 3 months as high as you can, preferably over 10 grand. You want to ensure your account doesn't go negative and you don't incur any NSF charges, as that will destroy your rating. You want to take advantage of and use other services the bank offers, such as CDs, savings accounts, other incentives and accounts. You want to open your bank account when your corporation starts and leave it open, as this longevity will help your bank rating. Make consistent deposits on a regular basis and ensure that each month you have good positive cash flow through your bank account by regularly putting into the account more money than you're actually taking out. So taking these steps will ensure you have an exceptional bank rating.